Once the dream begins.
I'm sorry. It's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. Man, Terry Higgins, what are you doing to us today? With the song request, Nick Berry, Every Loser Wins. Why are you trying to make us go to sleep? Terry Higgins, we're supposed to be live and vibrant and excited about cryptocurrencies and what's going on in the markets. Got us feeling like we're watching The Notebook or something. But anyway, thanks for the song request, Terry Higgins. Man, that guy is hilarious. Hope you guys are doing well today. And again, welcome to another episode of My Two Satoshis. Today, we're looking at an article, and I got to give a shout out to my man on Twitter who pointed this out to me. This one slipped through the cracks for sure. I did not know anything about this. The CME actually asked the CFTC if they could create double the amount of Bitcoin. Insane. So we're going to take a look at this. And I got to give a shout out to Silver Crypto out there on Twitter for putting me up on. He said, how in the hell is this even possible? Well, we'll talk about it. It's very possible when we're talking about futures and these types of contracts. And so that's the first topic for today. The second one is out of Decrypt Media. I know you guys probably remember I just touched on this yesterday about MimbleWimble, actually, not Grin in particular. MimbleWimble is the privacy protocol that Grin and the other privacy coin Beam implemented. Well, one of the devs from Grin claps back at the guy who, the ex-Google engineer who put out the whole report that I told you guys about yesterday. He said, no, this is something that's been known and well documented. So don't know what that means, because just because it's known doesn't mean that it isn't a vulnerability. But we'll take a look at the details. And the third and final article for today is out of Crypto Daily. SEC puts Bitwise ETF back under review following initial rejection. I wanted to cover this because what I want you guys to understand is that Bitcoin ETFs is the one that would put the most bid under Bitcoin, because I talked about this in, I think, this morning's My 2 Cents video regarding how the Federal Reserve and central banks around the world are forcing everyone into index funds like ETFs or just straight outright buying the indices. Active investing is a thing of the past. Passive investing is the way to go right now, because it's just free money flowing into the market. So they're just going to go, this easy money is just going to go into the ETFs, and those ETFs have a basket of stocks. So there's no real price discovery going on, if you guys understand what I mean with that. If I've got 5 stocks that compose this ETF, then all 5 of them will benefit from money flows. Do earnings really matter? No. PE ratio, none of that stuff will matter. And that's what's happening. So an ETF will probably be a good thing, because then that will allow like pensions to just put a bid right under, buying this stuff. Now, what I don't know is if these ETFs, I know the ETFs have to have a certain amount of the underlying assets in hand, but I'm sure it's not 1-to-1. So yeah, we'll take a look at that one as well. And before we go to sleep, I still want to give you guys a heads up on the promo going on right now on cryptoblood.io. Save 25% on any of the packages, and that means an additional 25% on the packages that are 6-month and yearly for the algo. Fully transparent. Check it out, cryptoblood.io. There's no holy grail to this game, just big wins and small losses. This is the principal curve for the algo so far since November of 2018, and we took a huge dip. So this is good that we're coming back from that dip back in January of 2019 when we had no liquidity. But again, I've told you in previous videos that I've upgraded and enhanced the algo, so hopefully that if we have an area where we have no liquidity and it's no price action going on, we'll just kind of go sideways instead of drawing the account down. So again, all the performance is available on cryptoblood.io. A shout out to Moon Lambo. If you guys need crypto apparel, well, this is a place to go. You can save 10% if you use the word CryptoBlood10 at checkout as well. So let's take a look at this heat map. We're all red today. Bitcoin is at 8,100 right now, down 1.3%. Its dominance is at almost a flat 66%. Ethereum down 2.3% to 174 bucks. We've got Binance down 3.5% right now. It looks like to $18. It's definitely lost that $20 handle. EOS down 3.5% to $3.09, just barely holding on to that $3 handle. And we've got Litecoin down 2.9% to $54.68. All red here today, people, for the most part. And I see Coin 360 has got some new fancy looking motion thing going on with each of these tiles. I don't know, it's making me a little dizzy, but there you have it. And nothing really to update you on regarding Bitcoin at the moment. However, at any moment we can either head up or down. I don't know. All I know, the critical levels at this point is 8,300. We would have to breach that area. That is now resistance. And our next area of support, as I told you yesterday, I didn't actually save it, but 7,700 is the next level of support in this area. That will be the next area of support. And then finally, 7,400 is the last area to save us. So the first article that we got to take a look at, and this is old, by the way. This is back in September. This slipped by me. I have to give my shout out to Silver Crypto out there. Essentially, the CME has asked the CFTC to double Bitcoin futures capacity as interest soars. Now, what do you think that means? The Chicago Mercantile Exchange Group is petitioning the United States regulators to allow its clients to double their open positions. According to NASDAQ on September 12th, CME has already put its plans before the Commodity Futures Trading Commission. If successful, each investor would gain a monthly limit of 2,000 contracts per spot month instead of the current 1,000. The move comes on the back of constant growth in demand for Bitcoin futures, with CME's volume setting new records on a regular basis. The NASDAQ notes that the CFTC officially states that lower risk trading instruments are not subject to limits. Therefore, an agreement to lessen the strict controls for CME could be construed as the regulator having more faith in Bitcoin options than before. This is one more way we're providing customers, institutional traders, and end users with additional flexibility to trade and hedge Bitcoin price risk. Okay, so since reading this article, Silver Crypto, this is what this means, because it doesn't mean what you think it does. However, it still doesn't matter because it's all fictional. It's all cash settled, so it doesn't really matter. They can create as many contracts as they want, really. But essentially what this means, man, is now traders, because this is considered a riskier type of asset, they put limits on those particular assets as far as how many of those you can have exposure to, either a put or a call. So out the gate, the CFTC put a limit of 1,000 contracts on an individual trader. One contract constitutes 5 Bitcoin. That's still 5,000 Bitcoins in one contract. So they're just wanting to up that limit to 2,000 contracts that a single trader can hold at one time. So essentially 10,000 Bitcoins, which at this point would be around 86 million, something like that. So that's what that means, man. But I hear you. I hear the concern. It doesn't really matter, to be honest with you. It's all fake money they're playing with. It's basically a casino house to gamble on Bitcoin. Exactly what it is. The second article out of Decrypt Media. Is Grin's privacy model really broken? A researcher claims that he has uncovered the addresses of 96% of Grin's transactions. No, he didn't, says Grin. Oh, man, this is a PR nightmare. The privacy model, proof of work, blockchain, MimbleWimble is fundamentally flawed. That's the article that I talked about and reported on yesterday by founder of Dragonfly Capital. But Daniel Lindbergh says that it isn't. He's referring to Grin, which implements MimbleWimble. It says this is a big deal and is not yet been settled. If Daniel is right, of course Lindbergh says he's not, it would undermine the main reason to use MimbleWimble, which prides itself on being a scalable, privacy-based protocol that verifies transactions without having to store the entire history of the chain. So we know about the whole backdrop of this situation. You know, Ivan said that he was able to basically uncover the exact addresses of senders and recipients of 96% of Grin's transactions in real time. But what's interesting here is that Ivan argues that in Grin, whenever two transactions cross in their dandelion chains, they'll get aggregated early. If this happens, then by the time the transaction is broadcast for anyone to observe, a sniffer node cannot disaggregate them. If you set up enough sniffer nodes seeking to root out the originator of the transaction, it's easy to root out transactions because eventually all transactions will reach the sniffer. And bingo, in his attack, he was able to link 96% of all transactions while only connecting to 200 peers out of the total 3,000 peers in the Grin's network. And this even got the attention of Vitalik Buterin, who said if your privacy model has a medium anonymity test, it really has a small anonymity set. If your privacy model has a small anonymity set, it has an anonymity set of only 1. Only global anonymity sets like ZK Snark are truly robustly secure, he said. That's what Buterin tweeted out. Now, to the contrary, Lindbergh says the problem is well documented and is listed as one of its open research problems. Worse, says Lindbergh, numerous claims, including the title of the article itself, are factually inaccurate. The attack does not break MimbleWimble, nor is it anywhere close to being so fundamentally as to render it or Grin's privacy features useless. So Lindbergh says that MimbleWimble doesn't have addresses such as those that might be linked to a particular Bitcoin wallet, and so it's not possible to link addresses that do not exist. It's unclear how law enforcement would know anything about a non-existing address. Lindbergh says that all Ivan can really determine through the attack is that output A spins to output B. Well, I don't know what the hell. I'm not that deep technically when it comes to cryptography. So I'm going to leave it up to you guys to figure out if you're going to trust this. Me personally, I will wait it out just to see what happens, get more information on this whole situation, because this does not sound kosher. Let me know your thoughts about that. Would you trust Grin at this point with your anonymity? And last article out of Crypto Daily, the SEC puts Bitwise ETF back under review following initial rejection. So it says the United States SEC is looking into the decision to deny the Bitcoin exchange traded fund that was filed by Bitwise Asset Management and NYSE Arca over a year ago at the time of writing. So it says that the SEC said that the ETF filing for Bitwise Asset Management will be going back under review as announced on November 18th. The commission asked that this comes after the early rejection under grounds of not meeting the necessary requirements. So a quote from the SEC said the commission is disapproving this proposed rule change because, as discussed below, NYSE Arca has not met the burden under the Exchange Act and the commission's rules of practice to demonstrate that its proposal is consistent with the requirements of the Exchange Act Section 6B5. And in a particular requirement that the rules of the National Securities Exchange be designed to prevent fraudulent and manipulative acts and practices, like they do in the silver and gold markets. Yes? Man, these guys are a bunch of hypocrites. Anyway, that's going back under review. Do you think they're going to actually allow it this time? As I stated at the beginning of this video, with ETFs, they may I think they're actually going to have short ETFs as well. But primarily when you're talking about ETFs, you're talking about long positions, mostly long only funds and such that are going to be utilizing and allocating some of their portfolio into these options. So I personally think if this is approved, it is a long-term bullish play for the price of Bitcoin. Nothing more, nothing less. So that's pretty much it for today, ladies and gents. I'm getting ready to go back to sleep because Terry Higgins is putting us to sleep with Nick Berry. Every loser's win. Man. It's your boy Crypto Blood. Make sure you guys like, share, and subscribe, and click that bell to continue to receive unbiased crypto news reported by yours truly, Crypto Blood. I'm out of here, people. How?